Since the stock market crisis which began in 2008, many believed that the bond market would provide a more reliable avenue for firms to raise capital. Firms that planned to venture into the bond market eventually had to shelve the plans as market sentiments did not tilt in their favor. The Debt Management Office (DMO), on behalf of the federal government, raised over 1.1 trillion naira from the domestic bond market last year. The DMO plans to raise 186.5 billion naira in the first quarter of this year, with some experts saying that the government is crowding out the private sector. The DMO insists the goal of the office is to develop the domestic bond market to enable the private sector access long-term funds to develop agriculture, mining, solid minerals, transportation, manufacturing and power. The DMO office also said Nigeria's debut $500 million euro bond, which was subscribed by 150%, was part of government efforts to encourage the private sector to tap into the international bond market. However, not many operators share this outlook.
The reason that you want to set a benchmark is not a very sufficient reason for the economy. Government is not a provider of funds for any private sector. Government is a provider of enabling environment, the provider of infrastructure. These are international organizations, these are international companies that know how to source their funds. So what they need is the environment that will make the business thrive.
The problem is not money. Our problem is the managers of men and resources. Lack of it has been our bane. Borrowing that money, going for selling those bonds at this critical point in the nation's history. Any good observer will call it campaign fund, and we're going to pay for it.
Observers say the attraction of corporate Nigeria to the bond market will be determined by interest rate. But there is also the talk of corporate bodies being able to access cheaper funds from the international market.